all, welcome to the firm. On the show this week, what can and will the government do with the Shom Committee's draft report on retrospective amendments relating to indirect transfers, and why Arun Jain of Polaris is being punished twice over for insider trading. This week, the Shom Committee submitted a draft report on retrospective amendments relating to indirect transfers. Well, to put that in simple English, the committee was asked to analyze the amended Section 9 of the Finance Act 2012, and Section 9 says transactions, offshore that is, between non-residents involving underlying assets in India should be taxable in India with retrospective effect from April 1st, 1962. Now, this amended section made several transactions, such as the Hutch Vodafone one, taxable in India. The Shom Committee analyzed the amended Section 9 and said, in brief, retrospective application of tax should occur in exceptional or rarest of rare cases and with particular objectives. It went on to say it should not be done to expand the tax base, nor done without stakeholder consultations. The committee said that the retrospective amendments in Finance Act 2012 relating to indirect transfers are not clarificatory and instead an effort to widen the tax base. These amendments should be applied prospectively after introducing clear definitions. And if the government must impose them retrospectively, then they should apply only to the seller, not to the buyer, and no interest should be charged, no penalty levied. The Shom Committee has also made recommendations on what types of indirect transfers should be taxed, whether retrospectively or prospectively. For instance, only those transactions where at least 50% of the underlying assets are in India should be considered. Only capital gains attributable to those India assets should be taxed, proportionality. Transactions involving the transfer of less than 26% voting power should not be considered. Foreign companies listed on a recognized stock exchange and whose shares are frequently traded should be exempt. FIIs and some types of private equity transactions should also be exempt. And most importantly, treaty exemptions should be respected. That said, this is a draft report. The question is, what can and will the government do with it? And to answer that, I have with me well-known tax advocate Dinesh Vyas, Rohan Shah of ELP, and joining me in Delhi, S.R. Wadhwa, advocate and former Chief Commissioner, Income Tax. Gentlemen, to all three of you, a warm welcome. I know from our previous conversations that you broadly agree with the proposals laid out by the Shom Committee, so I won't examine every single point in detail, but I want to start by asking you this, Rohan. Don't you wish this exercise had been undertaken way back in February? We would have been saved several months of pain, agony and chaos.
I agree with you. I wish it had, but I don't think that this thinking had crystallized at that point in time. And it seemed almost inevitable that we had to live through the anguish. But I'm glad this is here even at this point in time.
No, and in fact, these views, these very views which have been now put forward by Mr. Shom and the committee were already put forward even at that time. And it is sad, it is a tragedy that, the then finance minister did not listen to it, forced himself to do this, and now you have the committee report which completely matches in its thought and its reaction with what the public perception was. It's an agony, it's a painful thing that we have gone through, and really very refreshing document coming virtually from a government source. So let's see, how this is going to be taken forward. Way forward is the real question.
All right, so before I get to that question, I'll just get Mr. Wadhwa's views on this. Mr. Wadhwa, don't you wish these were the consultations that government and revenue had undergone way back at the beginning of the year before they imposed that retrospective amendment on us and caused all the chaos that we've seen of the last 6 months?
As a matter of fact, if you see the history of tax legislation, such serious recommendations or amendments used to be through the direct taxes amendment bill and not through the finance bill, where a lot of discussion, analysis used to be obtained. In my opinion, we should revert back to that system whereby the public and other people, interested groups, they can express their views if there is an amendment bill, and government also doesn't have to face the sort of this sort of situation where the Finance Act having been passed by the Parliament would need to be amended seriously.
All right, that's an important point, and having ruled the fact that we've wasted 6 months, let's now get on to the issue of how the government is going to implement this if it decides to implement it. I think the first proposal that the Shom committee makes is that such an amendment should be prospective. If the government was to accept that, how would it take what they've done with Section 9 in the Finance Act of this year and turn that into a prospective amendment? That is, would they do it via circular or would they have to do it via legislation? Mr. Vyas?
They will have the option, no doubt.
Yes, of course, but what do you think that they should opt for?
According to me, it should be only through a legislation. That similar retrospective amendments have been reversed is not going to happen for the first time. Even in the past, in the year 2001-2 or earlier 1987, 1989, there were retrospective amendments, and within a matter of a year, they were completely reversed within a complete U-turn.
So there is a history of Parliament changing its mind, which is fine. Right.
Yeah. So that, according to me, will be the safest way for the government to put its pressure, to put its weight on, and not go by the circular route. Because as far as the circulars are concerned, there is a difference of opinion as to whether they can deviate from law or not. Yes, most of the Supreme Court decisions have taken the view that circular can deviate from the law. But there is one solitary judgment in the case of State Bank of Travancore, where Justice Sabyasachi Mukherjee, speaking from the Supreme Court, Justice Rangnath Mishra agreeing, saying that the circular cannot deviate from the law. And if therefore you do not want further litigation on this aspect, which can be again very, very lengthy, and you want that certainty, which is what you want to offer to the international public, it will be always better to avoid the circular route and go straightway by the law, by the amendment through the legislation. And as I said, there are precedents in the past. Within 1 year, complete U-turn.
You agree, Ron?
The way I see it, there are two parts to it. One part is this whole situation on retrospectivity or not. And there I think you will need a process through Parliament. But if you see the remainder of this, which is really in the nature of clarification or opinions on the taxability of different transactions, position under the DTAs. Now, if that comes separately through a circular, then quite honestly, much of the venom of what has happened will already be drawn. And I think in the current situation, where how this might pan out in Parliament, what sort of a winter session you will have, etc., is uncertain. I think a good course to go would be, yes, the retrospectivity issue placed before Parliament, the rest of it can get delivered as a circular, and if that circular is delivered, and that is not deviant from the nature of the law, then that circular itself, I think, would serve a very large purpose, because almost 95% of transactions, just in terms of the clarifications, would be beyond the tax net.
So you're saying that that would, sort of reduce the burden on most of the cases out there that are sort of pending, and yet not create a situation where a circular takes an opposite view of what the existing law says and hence is challengeable in a court of law. So the circular doesn't take a position on retrospectivity or prospective.
Yeah.
It just puts down the conditions as proposed by the Shom committee, and because those conditions are narrow, a bunch of transactions would fall out of the tax net. That's your point. So when do they fix the retrospective aspect?
See, they fix the retrospective aspect, and as has been said, particularly given the validation clause, you will have to take it back to Parliament. But how quickly you will make passage through Parliament is uncertain. And if after all of this effort, you have an uncertain parliamentary process, and we are all waiting for that process before there is any effective relief, I think you will undo much of the good that you have now attained. So what is critical is, look at that retrospectivity. If that effectively goes through the parliamentary process and is unchallenged thereafter, 100% of the transactions are out of the tax net in this controversy. But if
except Vodafone, because, or let me put it this way, not the Hutch Vodafone transaction. I mean, Vodafone might get away because the Shom committee says don't impose tax on the buyer.
Yeah, so all non-treaty will remain. Typically treaty like Indo-US, Indo-UK will remain.
Right.
And those which remain again will have to go through the 26% threshold, the proportionality threshold, the substantial value threshold. So what will effectively remain taxable is very small. And within what remains taxable and is very small, you again have a challenge of enforcement because you need to reach across jurisdictions to try and enforce. But if you isolate all this, which is ultimately taxable, it is very, very small.
Okay, let's get Mr. Wadhwa's views in before we continue this. Mr. Wadhwa, what do you think is the best way ahead for the government in terms of how they proceed with this Shom Committee report?
See, I would agree with Mr. Dinesh Vyas that we should solve this problem through legislative amendment.
But are you saying
Now,
all
why
the
I
proposals must go through
the
legislative action or only the retrospective?
No, retrospectivity has to be undone by legislative amendment.
All right, so all three of you agree on that. All three of you agree on that.
No.
Yes.
Yes. Now, another thing, as regards this remaining points, small points, whether the non-treaty countries applications, etc. No doubt they are small points. But my experience has been sometimes the officers do not obey the circular, they go against the circular, and then the problem starts. Whether circular is binding or the court say no, it is not binding, we have to interpret the law. So therefore, in order to set at rest the entire controversy, whatever is proposed to be done through a circular should be done through a legislative amendment.
All right.
So that there is a confidence in the people, in the foreigners who are coming in for investments and technology bringing. They should have confidence in the country's law.
Menka, this is a very important issue, very sensitive issue. Everybody has recognized, and it has international ramifications. We cannot have a further round of litigation, say, of next 5 years or 7 years, whether circular binding, not binding. And therefore, Mr. Wadhwa is also right. I mean, we have the same view, that it must be straightway up
All
front,
of this must be done through
the
a legislative route, right?
Absolutely.
All right.
Absolutely.
In which case, is this going to ever happen? Because now you've spent a year, you spent 4 years, 5 years chasing Vodafone.
Yeah.
You made a big deal out of it. You passed a retrospective amendment that Parliament approved of. You're going to see considerable political opposition if today you're going to go back to Parliament and say, we're willing to cede whatever 40,000 crores that we had expected to earn from this series of amendments, because we think this has not done the country's image good and we want to reverse the entire law. And we let Vodafone and the likes go free. Is it going to work?
No, and which is why I believe, while it may be ideal to go the legislation route, you will have to be much more practical. And there are clearly three aspects to it. One is retrospectivity and your innings in Parliament. The other is delivering the rest of this agenda as quickly as possible. And the third is tax administration at the level of assessments. And are we going to respect what we've said? Because we could have the most impeccable policy document out there, but if it is not administered in the spirit that it is supposed to, you are still going to take the downside of all of this negative investor sentiment. So if you are looking at this practically, take what you must to Parliament, the rest of it can come through a circular, but you have to ensure that beyond delivering the circular, you will have to ensure discipline in terms of administration if you truly want to deliver the whole package.
Mr. Wadhwa, please come in here, because revenue has been very opposed to this from what we hear. They have for the longest time believed that transactions like the Hutch Vodafone transaction must be taxed in India, and since it's difficult to extract that tax from Hutch, let's go after Vodafone. If the other proposals of the Shom Committee are brought in via a circular, as Rohan is suggesting, while Vodafone might stay in the net because it's a non-treaty country, it might escape the net also because the circular suggests that you shouldn't expect the buyer to pay the tax, go after the seller, in which case revenue will have to chase Hutch, which has, I think, almost no presence in India, if a minimal one at all. So how is revenue going to respond?
You are right. Although revenue will feel quite bad in having to lose about 12,000 crores or so, yet in the interest of justice and the state of law that is at present, and then to cut down all uncertainty on this subject and to bring about confidence of the investing foreign community, it is better to forego the revenue, which is of doubtful validity, rather than fight out another round of litigation. That's how I believe.
All right, gentlemen, I'm going to wrap it up there. It's anybody's guess what the government will do next. I also need to ask the question, if a circular is put out that only partly implements what the Shom Committee report intends to say, as Rohan has suggested, well, even that circular could be challenged in a court of law, can't it? Because it will let off a series of transactions that the Finance Act 2012 otherwise seeks to tax. So this is a complicated situation, and it's not clear how long it will take the government to extricate itself from this situation. I'll end by saying exactly what I did in the beginning. If only we had undertaken this exercise in February, we wouldn't be having this discussion. Let's take a quick break. Up next, why Arun Jain of Polaris is being punished twice over for insider trading.